Thank you very much for having us. It's a great sort of day today to report our results. We had a fantastic overall outcome for 2024. We have seen a 15% increase of our net revenues with a 15% EBITDA increase. Our EPS has grown 16%, so a fantastic year. It's a continuation of our strategy. Our strategy is very much intact. We see the big trends and we look forward very confidently into the new year.
We see a certain kind of decoupling. The market is rallying, storming ahead from one record to the other, whereas the economy is doing so poorly. Why is that, and can that keep on going also for this year?
Well, first of all, there is a number of geopolitical events that certainly are influencing the markets. We have seen overall, however, that the underlying sort of growth has very much been intact in the parameters that drive our own business. Those are the financial markets parameters. Those are the number of transactions. This is in the overall context, the trends, the mega trends that are shaping sort of a bigger investment in Europe, and that's very much going on.
So are you confident that this can also stay like this if we see, for example, tariffs being enacted? So is there a risk that international investors might actually lose appetite to invest in German blue chips?
Well, we've seen over the last few months, actually, that many have seen that Europe has bottomed out from a valuation perspective. We have seen the share prices in Europe outperform relative to other indices. You have seen this for the year of 2024, albeit all the negative talk and the underlying economic issues. Let's be clear, those are significant. There's big change that is needed in Europe, but the capital markets have to play the role to play in that context. So that will continue to drive, in particular, our own business.
I'm sure you talk to international investors, international financial community. So what's their perception of Germany as an economy and also a place to do business?
It's certainly an enormous number of challenges that they feel are untackled at this point. That's why the impetus, the discussion that is going on around how can the German economy and the transformation momentum be really strengthened is a very important discussion to come back and have a strong equity story for Europe and for Germany. But many of the German corporates are doing actually pretty well. That is a big split between what is the reality of very agile companies that have adapted to many of the geopolitical changes, while on the other side, the underlying sort of economy environment in Germany itself.
Yeah, it seems that German corporates are big at investing abroad, though. Is that a concern to you as well? Because clearly, if there's more and more investment moving away, then there's less capital market activity here.
Well, on the first hand, it is important that the companies react to the geopolitical changes. German companies have always been very good in being adapting. The agility that comes from the German Mittelstand connotation is a very powerful and positive development. At the end of the day, there's only a strength in that and not a weakness. Now, the point about the investment amounts that happen in Germany versus internationally, some of that is obviously a result of the fracturing of the geopolitical value chains that is going on. So that requires a stronger localization for German companies. And that's what is actually happening by them investing in the US, in Asia, in new locations.